Good morning, guys. Today we are going to start this basic financial statement. It is a small case study that we are going to do today. So now I'll be reading it for you with understanding. Mr. X, a Ola driver, planning to buy a new taxi car for rupees 5 lakhs, assuming car total life equal to 5 years and salvage value nil. So there is no scrap value or whatever we call it salvage value at the end of 5 years. Okay. Depreciate the asset using straight line method. Okay. To buy this car, Mr. X has taken a loan of rupees 2 lakhs from bank at a ROI of 10% per annum. Okay. So 5 lakhs की कार है. He is introducing 3 lakh from his own funds and taking a loan from bank of rupees 2 lakh at a rate of interest of 10% per annum. Fine. The loan to be repaid in 4 equal installment of 50,000 each. जो principal है 2 lakhs का, it will be repaid in 4 equal principal payments of 50,000 each. Okay. Then there is further operational data. Kilometer car driven per annum 60,000, and thereafter it is expected to grow at a rate of 10%. Revenue share per kilometer from Ola 10 rupees. He will be receiving 10 rupees per kilometer from Ola as he's a driver running a car under Ola. So he will be receiving 10 rupees per kilometer, and it is also expected to grow at a rate of 5% per annum. Great. Petrol expenses 4 rupees per kilometer. It is also expected to be grow at rate of 4%. Maintenance expenses 50,000 per annum. There is also growth associated with it at a rate of 10%. Fine. MCD charges rupees 70,000 per annum. Expected growth 2%. Payment release from Ola 1 month data period. So it is basically, what does it mean? He will be receiving his payment from Ola after a gap of 1 month. It means April month payment will be released in May month payment will be released in June month payment will be released in July, as so on. So there is 1 month debtor period. So he will be he will be getting his payment from Ola after a gap of 1 month. Income tax rate applicable on him is 10%. We need to prepare financial statement of Mr. X for 5 years. Okay. So it is a small case study. What we will be doing in it, we will be preparing assumption sheet first, then profit and loss statement, then balance sheet, then cash flow statement. Okay, I'll be opening Excel. Okay. Here, guys, you will be just observing how I am performing this task. You do not need to perform this task. You just need to observe. Later on, you can do this assignment as homework. Okay. First of all, I'll be applying some formatting, but before that, I need to create 3 more sheets. Okay. With Shift F11, I'll be adding more sheets. Okay. So I need 4 sheets here. To add new sheet, there is a shortcut Shift F11. Now I'll be renaming this sheet. To rename the sheet, there is shortcut Alt HOR. Alt HOR. First sheet is assumption sheet, in which we will be compiling all the data, plotting all the figures, which can be used for further statements. Second is Alt HOR, statement of profit and loss. Okay. Then balance sheet, same shortcut, Alt HOR to rename the sheet. Last, cash flow statement. Guys, as you know, profit and loss statement and balance sheet are mandatory part of any financial statement, and cash flow statement is optional for some entities and mandatory for some entities based on criteria. There are certain limits for applicability of cash flow statement for big enterprises. If that limit is applicable, then cash flow statement needs to be prepared. Otherwise, P&L and balance sheet are mandatory part of any financial statement at year end. Okay, so now I'll start from the assumption sheet. But before that, as I need a particular format for all of my sheets, so what I will do, I will press Shift and select these sheets also. What I am doing now, I have just grouped these four sheets. It is called grouping. So I have just grouped all these four sheets. In this way, whatever task I'll be performing on my one sheet, it will get automatically copied on the other sheet. Why I am doing this? Just for formatting purpose, as I need a uniform format for all the sheets. So that's why I have grouped them. Once I'll be done with the formatting, I will ungroup these four sheets. Okay. I'll select this portion, Alt HH. I will give background color black. So now, as you know, only white will be visible on black background. So now Alt HFC font color, it would be white. Okay. Okay. Alt HH, I'll give the light blue color. Okay. So now we are done with the formatting. Then I will again press Shift to ungroup these sheets. Okay. So now what I can see, whatsoever the formatting I have performed on one sheet, it is also copied on other sheets. So I do not need to prepare format again and again for all other sheets. Okay. So now I can start my working on assumption sheet. We move to case study again. Mr. X, Ola driver, planning to buy a taxi car 5 rupees, 5 lakh rupees, and he has taken a loan of rupees 2 lakh from bank, and rest 3 lakhs have been introduced by him from his own funds. So what is owner's capital? It is 3 lakh rupees. As you can see, this owner capital is not getting fitted in this cell. So I will press Alt O C A to extend the width of the cell. Alt O C A. Okay, fine. Now he has taken a loan of rupees 2 lakh from bank. So I'll be preparing debt schedule, or you can also call it loan schedule. There is a particular format for that. Opening balance, loan raised, loan repaid, closing balance. Opening balance, as you know, we are just starting the business. So opening balance is nil. Loan raised is 2 lakh rupees. Loan repaid, it is repaid in 4 equal installment of 50,000 each. Okay. I can just copy it and drag it for other 3 years. Okay. Then closing balance. What would be my closing balance? So now I will just calculate closing balance, opening plus loan raised minus loan repaid. This is my closing balance. Okay. I can say next year opening will be previous year closing, right? I will just copy this formula, Control C, Shift right arrow and enter. Okay. And this sum formula, opening plus loan minus loan repaid, this will also be copied and shift right arrow, drag it for remaining years. So this is how I can calculate closing balance of my debt. I will just select this portion, Alt H B U, to keep it under double lines. I can just save it to my desktop. Okay. So here we go. Okay. Now I'll be calculating interest amount. The loan has been taken at a rate of interest of 10% per annum. Okay. So now what could be the interest amount? Opening balance, I will keep it under bracket. Opening balance plus loan raised. I am assuming in this question that repayment has been done at the end of the year. So 2 lakh is the amount which has been used by Mr. X throughout the period. Okay. At the rate of 10% interest. Okay. 20,000 for first year. Now, what you will see here, I provided rate of interest 10% manually. What I can do, I can just link it from here. Okay. And I need to keep this D17 with $sign F4. I pressed F4. So it is now freezed. I need to freeze 10% because without freezing, I'll be dragging it for remaining years. Then the reference cell will also get dragged. So in order to freeze this 10%, I'll be keeping 10% reference cell under freezing. To freeze, we need to press F4. Okay. Control C. Here we go. Okay. Now we are done with the debt schedule as well as interest. Now, as he has purchased Ola new taxi car for rupees 5 lakh, I need to prepare here one more thing, which is called fixed asset schedule. Okay. To stretch the length, Alt or CA. Okay. Opening balance, purchases, sales, depreciation, closing balance. Okay. As guys, you can see the headings are not visible to me. These heading. So for that, what I can do, I can apply freezing here so that headings will be visible to me even if I go down. What I will do, I will keep my cursor at A5. I will press Alt W F. Now freezing is applied. Now if I go down, my headings will still be visible to me. Okay. Okay. Now coming back to fixed asset schedule. Opening balance, obviously, at the initial stage, it is 0. We bought a taxi car for rupees 5 lakh. Sales is nothing. And there is no sale throughout these 5 years. Okay. Also, there is no further purchase throughout these 4 years. Depreciation, they are saying straight line method. So obviously, I will depreciate asset equally throughout the period of 5 years as per straight line method. Equal amount of depreciation will be charged over the useful life of asset. So this divided by 5 useful life. And I will also keep this F23 under freeze and I will press F4, $2 sign will come and it will get freezed. Because without freezing, when I'll be dragging this formula for remaining 4 years, the reference cell 5 lakh will also get dragged and reference will get disturbed. Okay. So now I can just copy it and shift right arrow, drag it for remaining years. Equal amount of depreciation. Now what is the closing balance of my fixed asset? Opening plus purchases minus sales minus depreciation. Okay. So this is the amount of closing balance for fixed assets. Now I can say next year opening will be previous year closing. Yeah. I will copy this and drag it for remaining years. So this is my fixed asset schedule. Okay. I will select this Alt H B U. I will keep it under freezing. Fine. Okay. Now fixed asset schedule is done. Now I will come to operational data. Kilometer car driven. 60,000 for year one. It is expected to grow at the rate of 10%. Equal to this multiply 1.1. 1 for 60,000 and 0.1 for 10% growth. Control C, shift right arrow, enter. Next, revenue per kilometer. It is 10 rupees and growth is 5%. This multiply 1.05. Control C, drag it for remaining years. Then petrol expenses. It is 4 rupees for first year, then 4% growth, 1.04. This is the growth on petrol. Control C, drag it for remaining years. Then maintenance expenses. It is 50,000 for the first year and growth is expected at 10%. Equal to this multiply by 1.1. Control C, drag it for remaining years. So here we are done with maintenance expenses also. Now MCD charges. It is 70,000 for first year and growth is 2% equal to this multiply by 1.02. Control C, drag it for remaining years. Then payment released from Ola 1 month debtor period. We will be taking up this part after 10 minutes. Now we will calculate revenue. So my revenue will be 60,000 kilometer multiply 10 rupees revenue per kilometer given by Ola. This is my revenue for first year. Copy this and drag it for remaining years. So this is my revenue for following years. Then I will be calculating my total direct cost. Direct cost, nothing but the cost which is directly associated with running of car. It is nothing but a petrol. So what are my petrol charges? 4 rupees per kilometer multiply by 60,000 kilometer car running. So these are my petrol cost. Okay. Yeah. Now I'll calculate my total indirect costs. It is, there are two indirect costs. One is maintenance expense and other is MCD charges. I'll just link up these two expense from above. One is maintenance and other is MCD charges. Control C, drag it for remaining years. Control C, drag it for remaining years. So this is my total indirect cost. This plus this 120 for first year. Here we go. I'll keep them under double underlines. Alt touch BU. Okay, now I am done with the indirect cost also. Revenue is done. Indirect direct costs are done. Now debtors. Debtor means what are my closing debtors at each year end. Okay. So here we need to understand 1 month debtor period. 1 month debtor period means Ola releases Mr. X payments after a gap of 1 month. As I told you, April month payment will be released in the month of May. May month payment will be released in the month of June. June month payment will be released in the month of July, and so on. So, debtor period 1 month indicates that at each year end, only 1 month payment will be pending, which will be received subsequently in the first month of next year. So I can say if my financial year start from 1st April and it ends on 31st March. So March month payment will be released in April of next financial year. So on 31st March, what will be the amount of debtors? That is the payment which is yet to be released from Ola will be pending 1 month payment. So how I will be calculating my debtors is equal to my revenue. My revenue is nothing but entire year receipts which I need to receive from Ola, and 1 month payment is pending. So what I can do, I'll divide it by 12. This way, I'll calculate 1 month payment, which will be pending at year end, yet to be released from Ola. Got it? Control C, drag it for remaining years. I can also keep these under double underlines. Okay, control. Income tax rate is 10%, that we will be considering it in P&L statement. Now, here we are done with the assumption sheet. We have plotted all the figures. We prepared debt schedule, we prepared fixed asset schedule, we prepared operational data, revenue, direct cost, indirect cost, and debtors. Okay. So now I'll be moving to my statement of profit and loss. Okay. It starts from the revenue. I'll be linking up from the assumption sheet only. Here I got my revenue. This amount. Enter. Control C, drag it for remaining years. Okay. Now I will reduce COGS, or I can say my direct cost. COGS means cost of goods sold. I'll be reducing it from the revenue. Assumption sheet, my direct cost, petrol expenses. So when we reduce direct cost from revenue, we get gross profit. Okay. Here, minus this COGS. This is my gross profit. Okay. Now what I'll do, I'll reduce indirect costs from it. These are my indirect cost. This one. Control C, drag it for remaining years. Here I got my indirect cost. When I'll reduce indirect costs from gross profit, I will get EBITDA. EBITDA. Earning before interest, tax, depreciation, and amortization. I'll link my, I'll reduce it from gross profit, indirect cost. So here I got my EBITDA. Control C, drag it for remaining years. Okay, so it is my EBITDA, earning before interest, tax, depreciation, and amortization. Now I'll reduce depreciation and amortization from it. Okay. I will link depreciation from assumption sheet. We prepared fixed asset schedule. This is my depreciation, equal amount of depreciation throughout the 5 years. So here I will get EBIT after reducing depreciation from EBITDA. So this is my EBIT, earning before interest and tax. Now I will reduce interest. So what is my interest? I will link it from assumption sheet, debt schedule. This is my interest. Control C, drag it for remaining years. Now I will get EBT, earning before tax. I will reduce interest from EBIT, earning before interest and tax. So this I got EBT, earning before tax. Now only tax amount is yet to be deducted. I will reduce tax from EBT. How I'll be calculating tax? It is 10%. 10%. On 20,000, I need to calculate tax. There is a problem. I will reduce this out of this. Okay. Control C. Okay. Now I'll apply tax on this amount. Multiply this percentage. Again, I'll be keeping it freeze by pressing F4 so that a reference cell should not get dragged. This is my tax amount. Control C. Here we go. Now what I will get? EAT, earning after tax. We also call it PAT, profit after tax, is equal to this minus this. This is my profit after tax. I will keep it under double lines. So this is, guys, we have got earning after tax. Now I'll be calculating reserves and surplus also. Reserve and surplus is nothing but a profit retained into business. For first year, it will be nothing, as they have not told us about any dividend, any distribution of profit. So we will be assuming entire amount of profit is retained into business. So first year, reserve and surplus will be this profit. For next year, it will be the next year profit plus previous year profit. Okay, here we go. Control C, drag it for remaining years. Okay, so this is a reserve and surplus. Now we are done with the statement of profit and loss. Now we will be moving towards balance sheet. Okay. Balance sheets, as we know, it starts with liabilities. So first of all, owner's capital. Alt OCA. It is nothing but 3 lakhs. We can copy it and drag it. Then non-current liabilities. The liabilities which are payable after a period of 1 year are called non-current liabilities, and liabilities which are payable within a period of 1 year are called current liabilities. Okay. Alt or CA. Okay. So what is my non-current liability? It is nothing but bank loan. I will link this amount from assumption sheet, from the debt schedule. This is the closing balance of my loan. Control C, drag it for remaining years. In this case, as I do not have any creditors or something, so there are no current liabilities. Okay. Owner's capital is 3 lakh. Bank loan is, we linked it from assumption sheet. There are no current liabilities. One thing is missing, reserves and surplus. We just calculated a P&L statement. This accumulated profit. Control C, drag it for remaining years. Okay, here we got total liabilities. I will just sum up all these things plus plus. So this is total of my liabilities for all the 5 years. Now I'll be calculating assets. So first of all, non-current assets. Under non-current assets, we have a car that we bought. Closing balance of car, I'll be linking from my fixed asset schedule. Closing balance of car, this one. Control C, drag it for remaining years. Here, current assets. Under current assets, I have debtors that we calculated in assumption sheet. I'll be having cash and bank balance. Okay. Debtors I can link from the assumption sheet. These are my debtors. Control C. Okay. Cash and bank balance is yet to be calculated. We will get this amount from the cash flow statement. So at present, I don't have this balance. I'll be just closing up my total assets. But I will keep the cash and bank cell in my formula. This plus this cash and bank cell. Okay. So guys, as you know, assets and liabilities should match with each other. Our balance sheet should always get tallied. But at present, we can see total liabilities for first year are 558,000, but total assets for first year are 4,50,000. There is a difference. Okay. And it should get matched. And it will definitely match after we will be having cash and bank balance, which is yet to be calculated from cash flow statement. Okay, so I am creating one checksum here, just matching the assets and liabilities so that we will be getting differences between assets and liabilities. So presently we have differences in assets and liabilities. These are the differences. But once we will be having cash and bank amounts, this balance will get matched and there will be zero differences in checksum cells. Okay. Now I'll be moving to cash flow statement. Cash flow statement, guys, it is nothing but a cash and bank account classified under three headings: cash flow from operating activities, cash flow from financing activities, cash flow from investing activities. Okay. So now, first of all, cash flow from operating activities. Okay. We start this from net profit because when we talk about operating activities, so net profit is nothing but a closing amount, or we can call it a crux of operating activities. Okay, so it is better to start from net profit to calculate cash inflow and outflow of net operating activities. So I'll be linking net profit from statement of profit and loss. This is my net profit. I will link it from assumption sheet. Then guys, I'll be adding depreciation here. I'll be adding back depreciation because depreciation is nothing but a non-cash expense. And we are calculating closing balances of cash and bank in the cash flow statement. So there is no use of non-cash expense. Depreciation is nothing but a fall in the value of asset due to wear and tear, passage of time, and obsolescence. Okay. So as depreciation is non-cash expense, but it has been deducted while calculating net profit, so I am adding it back. This is my depreciation. Control C. Now I will also add back interest because it is not a part of operating activity, but it is a part of financing activity. So I'll be reducing it in financing activities. Okay. Control C. Okay. Now the third thing I'll be adding is changes in net working capital. Okay. We will be discussing this part after 10 minutes. Now I'll just be closing my CFO, cash flow from operating activity. I'll be adding up all the cells. This one plus this one plus this one plus changes in net working capital. This is the amount of cash flow from operating activities. Okay, I can call it A. Now I will calculate cash flow from cash flow from financing activity. Okay. In financing activity, first of all, we will take equity raised, nothing but amount of capital introduced by owner. Then debt raised. It is nothing but loan taken of rupees 2 lakhs. Then debt repaid. Debt repaid is the repayment of debt each year. In the debt schedule, we will be getting this amount, this 50,000 each year. Okay. Then interest paid, because interest paid is part of financing activity. That's why I added it back in the operating activity, this amount, because it was deducted at the time of calculating net profit, but it is a part of financing activity. That's why I added it back in the net profit. Now I'll be reducing it from the financing activity. And this debt repayment is outflow of cash, so we will keep it under minus sign. Okay. This was inflow, it was positive. This was also inflow of cash, it was positive, but this is the outflow of cash. We are paying this amount, so it will be coming with minus sign, negative amount. This interest will also be coming with minus amount because it is also outflow of cash. Control C, drag it. Equity raised, debt raised is inflow, debt repaid and interest paid is outflow. Okay, now I'll be closing my cash flow from financing activity. I'll call it B, is equal to this plus this plus this plus this. Control C. Now I am done with financing activity. The next is cash flow from investing activity. Okay. Under investment, there is only one thing, that car purchased. It is outflow of cash, so I will keep it under minus sign. Okay. So this is the only investment we did. Now I'll be closing my investing activity also. This is my CFI and I will call it C. Now it is a time to close the cash flow statement. Opening balance of cash and cash equivalent, इसमें we will be adding up net increase or decrease during the year. Then we will get closing balance of cash and cash equivalent. Okay, so what is the opening balance? Opening balance, obviously, we just started business in the first year, it was nil. Net increase or decrease, we will just sum up these three activities A, B, and C. So I will start from the A. A plus B plus C. So this is my net increase or decrease during the year. Closing is nothing but opening plus net increase decrease during the year. Okay. Then next year opening will be previous year closing. I will also drag this one for remaining years. I'll also drag this one for remaining years. Okay. And this one for remaining years. So this is, I got closing balance of cash and cash equivalent. But one item is still missing in operating activity, which is changes in net working capital. Now I'll go back to my balance sheet. Here we will do calculation of net working capital. Guys, working capital is nothing but cash available or capital available in the business for day-to-day operation. So there is one formula of net working capital. It is current assets minus current liabilities. Okay. So what are my current assets? In current assets, there is debtor. Cash and bank balance will not be considered in this formula, though cash and bank is a part of current assets, but I'll not be taking in this formula because cash and bank has been otherwise considered, because cash flow statement is exclusively meant for cash and bank balances. So it has already been considered. We are just doing this calculation net working capital for debtors and creditors and stock and other items. But in this case, under current assets, only debtors are available. So we will be taking it current assets minus current liability, and liability side mein there are no current liabilities. So net working capital is nothing but a amount of debtors. I will be copying it and drag it for remaining years. So these are the amounts of net working capital for respective years. Now I will calculate changes in net working capital. So change how we calculate is equal to previous year minus current year. So this is the change. Control C, drag it for remaining years. So this is how I calculated changes in net working capital. This amount shows how much amount has been invested in current assets. It means it shows कितना आपका amount और ज़्यादा invested है आपकी current assets में, which is yet to be released. That's why it is coming negatively, because it shows previous, in comparison to previous year, you have invested 50,000 more. And in comparison to previous year, in the second year, you have invested 7750 more. Then again, in comparison to previous year, you have invested 8951.25 more. So it shows how much your working capital is blocked into your business. So changes in net working capital, I need this amount in my cash flow statement. I'll be linking up from the balance sheet. Here we go. So now I am done with my cash flow statement. I need these closing balance of cash and bank account in my balance sheet to tally it. So I'll be linking. I'll go to my balance sheet. Here I need cash and bank balances. I'll be linking these amount from cash flow statement, this closing balance. Control C and drag it for remaining years. Now you can see checksum is 0. My assets balances are matching with my liability balances. As you can see, 588, 558 000, 558 000. Last year, 1440370, 1440370. My total liabilities are matching with total assets. So now we are done with this Ola case study. Okay, thank you guys. We are closing up this session.